And yes, we are live. Hello, everyone. Welcome to Business Learnings. In this video, I'll talk about if HDFC, AMC, and Reliance Nippon are they a good buy. I'll not directly recommend. Of course, I'll give you all my point of view, my perspective on what do I think about these companies and what do I think about mutual fund industries in general. And I think that is more important rather than just going and buying the companies, the shares of the companies without much research. First things first, uh, India fares among one of the worst countries in terms of the mutual fund investments. Right? You know, 11%. If you just calculate the ratio of investments by Indians in mutual funds to the ratio to the GDP of India, it will be just 11%. That's it. For US, it is 104%. Brazil 50%, South Africa 60%. Almost all the emerging economies they are at 50-60% of uh, mutual funds to GDP ratio, and India is sitting at 11%, which is very pathetic. Why? We'll ask why. Because Indian people are not aware of mutual funds. ये there was a campaign, mutual funds sahi hai, a few years ago, 1 or 2, 3 years ago. It had started, and since then the penetration of mutual funds has increased, but it's still just at 11%. It's quite low, and that's why we think that in the near future, it's quite possible that this industry grows like anything. Quite optimistic about the industry and the companies who are operating in it. Now, there are a lot of mutual funds, but the only two listed players uh, in India are HDFC Asset Management Company and Reliance Nippon. And just for the information, Reliance Nippon is not a Reliance company. It's Reliance already exited from this company a few months ago. So it's completely managed by the Japanese people. Now, why should you invest in mutual funds? Why do we think mutual funds will grow? First reason is awareness. Okay, people are not aware that mutual funds in general, give a lot better return than their traditional investments. Where do people invest in India? In general, in India, people invest in gold. They invest in LIC. They invest in fixed deposits. They invest in real estates. What their logic is that these things always go up in prices. People buy houses because they think that, oh, I have a house and therefore I will not have to pay any rent. I'll have my own house. I can live in the way that I want to live in. All these things come into the picture. Gold, Indians have a huge affinity for gold for some reason. Um, Fixed deposits, even though they just give 6 to 7% of return per year, people still invest a lot of money in fixed deposits. Then they invest a lot of money in LICs. LIC is not a investment product, not an investment product. It's it should be more of a you know insurance product and not an investment product, as the name suggests. So as people will become aware that mutual funds in general give better return than gold, better return than almost double returns than your fixed deposits, and with this booming real estate market, it was booming and now it has stagnated. So not much of scope there as well. And if you buy a house, it's a completely different ballgame. You have to consider a lot of costs. You have to pay maintenance. You have to keep renovating it after a few years, and paint and a lot of things come into the picture. If you even rent out a house, if you just buy a house here uh, you are tied for the next 10 to 15 years. You have to pay money, you have to pay emis. If you are buying all of that, if you're buying a house right away, if you have that much money, I think you are smart enough to know where to invest that. If you talk about gold, gold has been given 6, 7, 8% returns, not more than that. Sometimes it does give good return, but if you analyze it for a long period of time, it is nowhere close to the returns given by um, the stock market. Of course, intelligently investing in the stock market. So gold is gone, real estate is gone. Uh, well, I'm not telling you to do anything. I'm just this information is only for the public who are not aware of a lot of things, who simply go and buy what other people think, what other people tell them. Buy land. Someone told them buy land. Land prices always go up. Yes, it is true, but and I think you should have a proportion, a small proportion of your investments in land and a small proportion of your investments in gold. But putting all of your money into one asset class is not a very good idea, because there are business cycles, there are economic cycles when these do not grow for a very long time, right? So you should always diversify, and a big portion of your funds should always go to mutual funds. Uh, our conditions, our status in mutual funds is so bad that make my trip. You must have booked flights, hotels, etc. through Make My Trip or GoIB. Both are the same entity. Um, our conditions of mutual funds awareness is so low. Even our investor community is so not aware of all these things that mutual fund is listed in Nasdaq in the United States, where all the tech companies are listed. 95% of Make My Trips revenues come from India, and it's listed in the US. Why? Because people in India are not aware. They'll not get appropriate value. They'll not be able to trade it properly. Maybe trade, speculate, but they won't be able to uh, estimate the true value of such companies. This is the extent, and that's why we we think that there is enough growth left. Just 11%. Imagine this going to 55, 56% in the next 10 years. So, uh, making your money 5 times in the next 10 years if you just invest in the mutual fund industry. I'm not telling the exact amount, I'm just estimating, guesstimating. So could be anything. Annualized, uh, 5 times will be close to 30%, 30% returns per year, which is quite good. And in the listed segment, as I already told, HDFC, AMC, and Reliance Nippon are the only players. And both these companies have a very good corporate governance. Uh, and of course, that's the reason they are trading at such high price to earnings ratio. So P by E ratio or price to earnings ratio tells us how much premiumly valued a company is. So both these companies are valued at a high premium. Uh, Therefore, you should always look for times when these companies take a dip, and you should buy at that. You can consider them, you can keep them on your watch list, and uh, you can you can weight your moves, and based on your calculations, you can go ahead with buying or selling. Personally, I like both these companies, and as a disclaimer, I do not own any of these companies as of now. Although I think that they will be good for long run, I still do not want to pay that much value. I'll wait for them to, you know, I will wait for the momentum to slow, and then maybe I'll invest. So these two companies are quite good. Uh, you can analyze them. Um, you can go through their financial statements and annual reports to get more idea about them. Um, Thanks for watching. If you have been watching this far, subscribe if you do not want to miss any updates. Thanks a lot. Bye.